Hey, welcome everybody to this evening's webinar. My name is Duncan Cooper. Thanks very much for your attendance. So getting into what is tonight's webinar is a review of the recent Forex trading patterns, my top trading setup. So we're going to have a look at last month's trading, look at the market structure, have a look at what patterns may have been setting up, how could you have been looking at the market in hindsight, and can you start to make hindsight your foresight as you're moving forward. All right, so some of the lessons that I teach in the webinars, I'm going to be reviewing some of the patterns. If you have any questions, just shout out. As we're moving through the latter end of this year, I'm going to be taking you through the patterns that I discuss in this webinar from start to finish. So if you have any questions as we're moving through, just type in. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time Forex trader. Been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me at our website. Go to acy.com, the Market News tab, or our YouTube channel, ACY Securities Australia. And also you can connect me on Twitter and LinkedIn. My handles are there. I'm putting some analysis through the week through there that you might find helpful. So if you want to join me through the week in social media land, you can connect with me there. And through the week, we have our Telegram channel. If you want to get access to that, just contact Nathan Bray. I'll put his details in the chat for you. If you want to get access to my chart lists and templates, the ones I'm using tonight, just contact Nathan. He'll be able to help you out. And if you have any questions, really, just contact Nathan. He'll be able to help you out with anything. So his details are here. Here we go. All right, so let's get to the charts now. Going to run for about 45 minutes or so. Fraction longer if we go longer, that's more than fine. And just bear with me a moment. It's only a slight technical issue. Okay. All right, so let me get my chart. So I'm just using my price action charts. I'm actually using my 12 pairs price action daylight saving because at the moment, Northern Hemisphere is in daylight saving mode. If you're in Australia, you'll be aware that New South Wales changed to daylight saving, but that doesn't affect my charts. It's only when the Northern Hemisphere changes to and from daylight saving do I go to a different set of charts. So at some point this month, I think it's the latter end of the month, New York and London will change, and then I go to my normal charts, which don't have daylight saving on them. So, all right, so if you've been to this webinar before, do it at the first week of the month. Generally just reference where last month started. So that actually isn't last month. Last month started just here. All right. So I'm going to go through 2, 4, maybe 6 pairs tonight. Now, some of the pairs have been in trend. Some of the pairs have been range bound. So we're going to have a cross section of how the market's been, how you could have been trading. I mean, some of you might trade multiple pairs. Some of you may only look at 1 or 2 pairs and you try and focus on, specialize on 1 or 2 pairs. And if that pair is trending, great. If it's consolidating, well, how do you trade it? So, all right, let's get into the Aussie yen now. I want to just look in this area here. All right, at the start of the month, and we might just put some support and resistance in as well before we're going to resistance here at 94.93. And we had a lower level of support down here from this top. That was at 93.031. Interesting, where did price move down to yesterday when the Bank of Japan intervened? Right down to 93.031. Went down to, out of interest, 93.06. All right, so at the start of the month, I'm going to get rid of that line now. We were kind of in the middle of the range. We came down and put a low in here. Now, if you look left, there was another little area of support that got broken, but we held here. So really the market started to maybe hold at this level. And that comes in at 93.568. And if you want to really, be in trading for the long haul, you really need to understand how support and resistance works, how the structure gets created around support and resistance. Maybe you may think it's forming a new level here, but really there's an old level over here too. So this is really respecting this level, even though it did break down below. So we drop down into this area on the 4-hour chart. All right, we got a little bit range bound in here for a while. All right. So for me, it becomes a range bound environment in this area. We see support hold here, we come back up, we come back down here. So you maybe anticipate that this would hold when you started to see that maybe we're forming some form of range. So I just want to put a line in on that top, 94311. Now, you might ask me, why am I using that top rather than that top? Well, I'm using that one because this one just false broke. I mean, I could use that one, but because that false broke, next time price comes up, it may only come up to that one. And you can see here, it false broke and then it came up to that level. So what I'm looking at here is a range that's been forming. And when I'm trading a range, I'll draw a fib across the range. Now, when price came up and failed up here, you may be anticipating that we could hold down here and we may just stay in a range. So we're trading a range. How I do that is I look to trade at support. So buying at support, stop goes at the 127 or below, and then I target the top of the range. So we can see there, if we use that mode of operation, while we would have bought nicely at the bottom and been able to take profits at the top of the range. All right, as well, what you could do if you're not, if you're a bit nervous about just simply trading at the bottom of the range, then you can wait to see if price action holds there. And what I then like to do is get in by the 79% level before price moves up to the top of the range, putting your stop just below here. So a couple of ways to trade the bottom of that range, depending if you want to be aggressive trading at the bottom of the range or waiting for at least some form of bounce. All right. Now, we are in a range. I just want to clear these lines off. So when we move up to the top of the range, and this maybe isn't that easy to do from a mindset perspective, but if we're in a range, we're buying at the bottom, we're taking profit at the top on the basis that we think price is going to hold to the range. Now we do false break the top here, but if we're getting out of our trade at the top of the range, wouldn't we think about trading back down to the bottom of the range? So there's then another opportunity to once more sell up here, and then you put your stop at the 127 level. Now what I would actually do here, I'm just going to get rid of that line. Because we're at the top of the range now, I would actually change my fib around the other way. So I would, because I like to have the 79% level at the top of the range or at the area where I'm trading at. So then I would drag these around. So I know where the 79% level is up here, because again, if you're not strong enough to just sell at the top of the range, stop at the 127R. Again, you can wait for this to start to reverse. And I'm going to take you through, I think this month, the 4-hour trade entry. There's a 4-hour trade entry here where we just break the 4-hour candlestick. confirming the reversal. That's an entry just there. Stop goes above the high. All right. Or you could be making sure that you're getting in by the 79% level. So it's very similar area to that. And then you're looking to target down here at the bottom. Again, you could have been looking down here. We don't quite make the bottom, so you would have had to manage the trade for profit, but we don't quite make the bottom. But you could have been anticipating that you're taking profits down here or close to. And you could also be anticipating that maybe you want to trade back up the other way once more. All right. Now, this doesn't actually meet the bottom of the range. When I'm trading something like it's a range, I'm trading the outskirts exactly. Unless I haven't realized it's a range and then I'm trying to get in by the 79% retracement level before it moves back up. All right, so a bit of a range bound environment in here. That's how you could have been trading there on the Aussie yen. And I think often when the market falls into a range bound perspective, we can just, think about, well, there's nothing to do. It's just getting a mindset that, okay, this is a range. So I trade it like it's a range, not like it's in a trend. All right, now later on in the month, go back to the day chart. I actually traded this myself. Didn't make a huge amount of profit, but made something. We come up to test this high up here. All right, so potentially at that point, I'm just going to get rid of some of these other lines. We're holding on weekly support, and this is weekly resistance up here. If you go to the weekly chart, you can see the weekly high, weekly low point here. So weekly high that's been support, holding here, and we come up to re-challenge that level. So that's in here on about the 20th of September, okay? Now, what I was looking at was we had a sell-off, and then I was looking for a rally back up to the 79% level. So if I just drop down to the 4-hour chart, this is this area here. So we get a breakdown of the 4-hour trend as well. We break this low here. So I was looking to trade up here at the 79% level, and actually gave you pretty much 3 attempts for you to be able to trade there. So let's say this happens in the middle of the night. Let's just see what time of day it actually happens. It may have traded, actually, that actually happened in the middle of the night. So so we fall down. Now you could have had an entry sitting there, or you could wait to see if it wants to hold, but you could have been looking to trade there. Stop goes above the high. And then you're targeting down here at the 127 extension. Now in this example, and it's a good example because I don't want to show you examples that just work all the time and give you a perfect result, because that's not trading. Is sometimes things work out great, sometimes they never meet your target, you just have to manage things. But this 79% level here, we almost retest the resistance level. All right, and then we trade down. We come back up to 79% level within a pip there, we come up and hit it there. And as well, I'm just going to draw that line to there and draw in another fib. So I'll just leave those lines on. You'll see that there's a smaller 79% level in here too, where there was 2 opportunities to trade there, to trade down. All right, so you had the opportunity to trade at the bigger level, 79% level, or the smaller level as price started to get a little bit range bound in here before it broke down. Now, if you traded the big level, we never met the 127 target down here, but if you were trading the smaller range, we did. So if we were trading the smaller range in here, then we obviously fell down, came back up, and traded down to the 127 extension, which I use as my target, and we actually went down to 162 level. All right, so a little 79% pattern within a larger 79% pattern. The larger one, of course, never met its target. And then, of course, we moved up after that. All right. Now, of course, last month, if you're with me in the webinars, I went through market structure. So what I might do tonight as well, whilst I'm going over some patterns that set up last month, I think it's worthwhile just hammering home the importance of getting your lines in on your chart. So as the month unfolded, the top of the month was up here. And then we instantly sell off. Why have we instantly sold off? Because it came up to a higher level of structure here, 96.87.7. Back to the day chart. So that's over here somewhere. There's more resistance here from the day chart. So we folks broke it there, then held back in time. But what I really wanted to point out was, you know, over the last, it's almost a week now. Just take that line off. The major, if you just have your major levels on from the monthly, weekly, and then the daily, the high up here has come from that monthly resistance pretty much to the pip. The low this week at the moment, this is now the weekly chart, has come in on this level here. All right. So having the major levels just drawn in and just waiting for price to get around those levels to trade. You know, I don't think you would go too far wrong if that was your kind of higher time frame philosophy of just looking for price to get to these levels before you look for a trade, and be prepared to miss out a few days for a trade, because you can clearly see here that it hit major monthly resistance, sold straight down, pretty much down to weekly support, and that was a massive bounce from that level. All right, so if you had the foresight to get short up here, maybe have the foresight to take profit down here. All right, it's proving, you know, the validity of those levels. All right, any questions, just type them in. Now moving to the Aussie dollar. All right, I was checking my notes, went through this and reviewed today. All right, so we've been in a trend to the downside, rather range bound. One of the key levels that we've broken below through the last month or two is this level here, 64.58. Now, sometimes price action will respect a level very, very precisely. At other times, it's trading above it, but it can't close above it. So through the course of September, all right, so there's September. You know, once we move below, whilst we're trading back above once and twice and a few little rejections on these two candles, we never closed above. So whilst that was a higher time frame level from the monthly chart, that's the monthly chart low. Here's your monthly chart low, just there. Sometimes we can be trading above, falling back below. But the clear thing that was happening is we never closed above that level all month once we moved below it. Now, a reference point from a day chart support or resistance is this level just here, 64.96, pretty much the 65 level, but it's 64.96. And, you know, you could say, well, why are you using that level rather than this level? Because predominantly, well, this area here did trade into this level, but then, you know, over here, we weren't trading into that level. So we're really rejecting this level here. That's why I'm using that level. Now, I just want to draw in the swings. What can often happen when we get a very large sustained move down, first of all? Like, you know, we get this very long kind of move. I know there's a few swings in there, but there's a very large move there before we go kind of sideways is we can often get a large move, and then there's a question about whether or not we're continuing down with the trend or not. And what can often happen is we get this kind of sideways but downtrend forming where it gets quite narrow and the ranges get quite even. All right. Before then, maybe it releases. So it often looks like gets a little bit tight in here. These ranges get very kind of symmetrical in length, and then boom. All right, that kind of thing. And it's just the opposite to the upside. So if you see a very strong trend and then it gets tight, you might be thinking, we're changing trend, but often it gets tight before then breaking out like it's done this week. All right, so on with that information, really what's been happening through the month is we've just been having 79% retracements back to resistance. So the first one was in here. All right, so we obviously trade down. If you're just looking to sell the 79% level at resistance, there was actually a resistance point just here and one just here. So that 64.96 level. 79% level was at 64.86. So you're selling there, your stop goes above the high. All right, that was the first one. Then we trade down. Then the next one. Again, the 79% pattern, really, you're just anticipating that the trend formation is continuing here. So that goes down. There's a 79% level. Now you could have been looking to trade at resistance too, but the 79% level would have worked very well. Stop above the high to then trade down. And we've almost hit the 127 extension into the new month. All right, so rather sideways, but if you're mapping out what price is doing, it's telling you it's getting a bit tight, but it's holding to a 79% pattern on two swings back up there. Now, breaking those two areas down on a lower time frame, if you want to get maybe in tighter, this was the first one. From what I call like a 4-hour entry, see how we trade up here on that candle? My 4-hour entry is a reversal from an area. It's a break of a candle. So that would be a 4-hour entry, stop above. Then I would be targeting the 127 extension. Now we don't meet the 127 extension, but you just manage the trade into profit through the course of time. If this had broken through the 0 level here and it was down here, by that point, if I'm targeting the 127 extension, I would just have my stop here. And then as this comes back up, it will take me out. All right, the second one. Comes up to test the resistance level, so it gets a little bit above the 79. So as I was showing in the day chart, you could have been trading, simply trading here, stop above the high, targeting the 127, or from a 4-hour chart perspective, you wait for price action to stop and trade the break of a 4-hour candle, which is here. Stop above the high, and you're still using the same target. All right, so sometimes waiting can get you a better entry point and a little bit more limited risk. But on the downside, trading this style is sometimes you can get an entry here and then it comes back up to retest, takes you out, and then falls down. So sometimes it's better to have your stop above here, but that's trading. So there's never a foolproof way of doing things. Now, what I wanted to point out here as well, just to continue your learning, as we did hit up here, what I did notice was, having a fib tool, you could obviously have a fib tool across that range, but there was another fib point in here, in that Edwin, I haven't done the pound yet, so you haven't missed that one. Just on the Aussie yen, I'm in the Aussie dollar at the moment. All right, is with this Aussie dollar, whilst there's the bigger range there, when price was coming up here, we broke above this top range. And then as we came up, we actually stopped at the 127R of this range. So there was a couple of ranges in play here in terms of fib tools. There's a big range here that we're trading up. All right. We do move above the 79% level, but of this range here, price comes up to resistance at the 127R. And that's often then a very significant price point for reversal too. So if you want to make a note of that, start watching for that kind of price action reversal. If you have multiple ranges that you're watching, that can often happen too. All right. Now I have to start the motor along. We're already halfway, half an hour in. So Eurodollar, I want to go to the Eurodollar next. Now we have had some nice trends, so I think it's worth showing you what you should be doing with nice trends. And some of this trading is going to look very easy and simple, but that's how it can be with good, strong trends. So the trend is quite clearly down. This is where the start of the month was in the Eurodollar. And we broke through support. And this just offers you a very nice trade back to structure. 107.65 is the level. All right. Then we trade down. Pretty much just come back to the level. 2 trading days there, the high of the days are coming in at that level. All right. So if you don't just trade there on the first day, the second day, if it comes up there on the second day to the same level, that's such a high probability level for failure. If you start to see it failing on a 50-minute chart, for example, in that area, such a high probability area to trade. But let's just have a look at it on the 4-hour chart in that area. So this is that area here. So the first trading day, we come up to hit the level, we reject. Now for me, if you want to trade a 4-hour entry, there's a 4-hour entry there. It's just a break of that 4-hour rejection candle. Stop goes above the high. All right. Then in the next trading day, we come all the way back up. Now, if you're trading there, this is going against you and you'd be sweating a bit, but it doesn't take out the high, so it doesn't take out your stop. If you haven't traded the first day, then what you could be doing in the second day is drawing a little fib across this range here. And you could be watching to see how this retests resistance and what does it do at the 79% level. So it actually here, I get rid of these. Just want to get rid of my lines that I've drawn in. Forms a little, not perfect, but it forms some form of, there's a little bit of a dip down here before we run back up. All right, so you could have been looking in this area here for a little right shoulder, little head and shoulder pattern there on the 4-hour, but really selling at the 79% level or at resistance, putting your stop just above. So you could have traded the first day on the break of the 4-hour candle. Second day, you could be looking in there for a little small 79% retracement head and shoulder pattern to take a position to trade maybe down for the long term. All right, in the long term, it's at the start of last month, probably knock my mic over. Sorry. Probably the target last month was down at monthly supports, which was what, 106.35. would have been a good target. So 106.35 was down here. So really broken support becomes resistance, and your target was then support, monthly support here, which shows you a bounce to trade back up in the short term. Now that bounce here offers you pretty much then a 79% retracement. There it is. Now I think it misses it by a pip. So if you had an order, pip or two, it misses. If you were having an order there sitting there, you may not get filled. But if you're watching, hopefully you could have done something to manufacture an entry. What it also does, I remember saying this in the webinar last month at some point, came up to fill this imbalance here as well. So where it stops is pretty much where the imbalance was as well. So it was just a fraction short of the 79, but really a 79% retracement before then ultimately moving down through. Okay, but really this kind of pattern structure I'm showing you here, break of support becomes resistance, down to support, bounce, continuation, move down through. We'll often see this kind of thing happening in a very strong trend. We break above a level, it becomes, if we break above a level, broken resistance becomes support, or in a downtrend, broken support becomes resistance to continue the trend. All right, so that's the euro dollar, and very similar on the pound dollar. There's the start of the month. This is almost the exact same kind of time and price point on the chart in terms of price forming. We have a level of support that gets broken, 125.47. Pretty much just come back up to the pit. All right. And then we've been continuing down ever since. So let's have a look at that on the 4 hour. That's that little area up here. Now, there's a little 4 hour uptrend here. All right, and price trades into resistance. But what I can also see is, if you understand how to use a fib, so let's just talk about an uptrend using a fib. Now we have an uptrend. Let's just, we have an uptrend. All right. And, we pull back within the fib. And our targets say the 127 extension. So we have a little uptrend in here. We go up to a higher top, higher bottom, up there. So what actually happens is there's a little bit of a confluence of events happens at that resistance level. Let me just get rid of that. So whilst we have a little 4 hour uptrend up here, trading back into broken support, what you're going to see is that, we get into the profit taking area of the fib tool. So we move up, we pull back. Often, it's not 100% perfect here, but often the 127 level or the 162 level lines up perfectly with the resistance level. It's in the middle there, but at that point, you're in the profit taking level of the fib tool. So you would expect that to struggle to move through because of its position within the fib tool. So, profit taking out of the fib tool into now resistance, and then you get a rejection on the 4 hour chart. So if you don't trade the level, just trade the break of the rejection candle. Stop goes above the high. And you can see then that would have worked nicely. So that's how it would, how you could trade that level. As well, what happens in here, if you understand my lesson on imbalances, there's an imbalance in here that gets filled. So we have a little 4 hour uptrend that gets into the profit taking area of the fib tool. We hit daily resistance, we fill that imbalance. So price is wanting to come up here to fill that imbalance at resistance before then moving on down. Okay. All right, let me just get rid of my lines. So that was a nice opportunity to trade down for long term on the pound dollar last month. back to the daily. Now there was a little trade in here. So it's just an intraday swing back up to broken support. So we trade through the next level of support here. $124.45. So that day we trade through, the next day intraday we just come back up to the level. So that's that little swing up here. All right. So you're trading back into 4-hour now broken support being resistance through there. And that your entry is really just there. Now you could drop that down to a 15-minute chart. Let's have a look at that on the 15-minute chart. All right. And, you know, two techniques I teach is the swing point break or the trend line break. Trend line would have been rather acute through here, although there's a little trend line here. Okay, so you could have been entering on the break of the trend line or closing below the trend line, and we also break the little 50-minute support level. So really the trade entry is in this area here. Break of the trend line, break of the swing point level, stop above the high. That's how you could have traded that retest of broken day support the next trading day. And then down she's been going ever since. Tim, you're asking me, what if a sell limit is put there at the resistance? Yeah, you can use a sell limit. So if you're looking at, for example, this level here, or the previous level, like with it in these examples I'm showing you here on the pound dollar and the euro dollar, you don't have to look for like a lower time frame trigger. You could, you know, the first one just there, you could simply have a sell limit here, stop above. Sometimes I'll use a 100 pip stop. So you could have been selling at broken supports, 100 pip stop. Again here, as this comes back up, you could sell there, 100 pip stop. And, you know, from the second trade there, this is traded down 400 pips. All right, so a good 1 to 4 risk reward there. And this one's probably 1 to 5. Yeah, that's 1 to 5 from up there. So I'm quite happy at times just to trade at a level with a 100 pip stop if I think there's lots of room for the market to move. It's very simple trading. You're looking for the trends. This is a downtrend, so break of support, trade the retest, 100 pip stop, and then you're going to be right or you're going to be wrong. But what you need is room to support and the ability to be able to create a target that offers you good risk reward. All right, let's pop to the pound yen. All right, so this has been forming a downtrend through the course of the last month. And this is a trade that I pointed out last week. Again, it's just as simple as waiting for the trend to rally back up to broken support. Broken support becomes resistance. I was looking at this level here, 182.679. I pointed this out last Thursday, last Tuesday and Thursday. All right, now there was a few things that you could have used in terms of tools as well. You could have had a fib drawn across, so that blue week, which was last week, traded inside the week before. So you could have been monitoring the range of the week before. So drawing a fib across the range of the week before, which was that range just there. So the range of the week before, the week before's candle was there. All right, that was the range. So there's actually two fibs in this trade. There was the range of the week previously, we came up to 79% level. So theoretically, it was a 79% level trade. And a failure at the broken day supports. So you could have traded at the broken level of support or the fib level. Stop above here, previous week's high. We can see it's been moving down. And then of course we had intervention yesterday, which would have been great if you were short. Another fib level that was also apparent was from the day chart. So if you went to the day chart and used the day chart swing point high to that low there, then we had some form of overlap in here. 79% level from the weekly range candle. And then the daily swing point range, there's a 62% level up here. All right. All came together for then to move down. And then at the start of this week, which is now into the new month, there was a little 79% rally in here. So whilst we're not talking about this month, but as last month finished, we fell down. There was a little 79% rally in there to retest resistance once more to move down. All right, so hopefully, everything I'm showing you tonight, though, is all based firstly around support and resistance. All right. Then I'm using some fibs just to complement things, but really it's starting with what is the trend? Support's been broken, trading back to resistance. And it's just being patient enough to wait for price to get there. Because often when I'm doing analysis webinar, price is in no man's land, and I am waiting for price to move back to a level. All right. And Edwin, you're telling me you missed that twice. Yeah, well, it was definitely there. All right. I think, and it's worth noting here that sometimes price will just hit a level and yes, just hit it, and then it changes and moves very quickly. And if you weren't sitting there with an order, you miss out. But in this case here, you had ample time really over the course of a 24-hour to, look to sell at 182.67. I mean, selling at 182.67 with a 100 pip stop. Just trading the probabilities of this holding as now resistance for a continued move down with a trend. In this case, it would have worked out exceptionally well because intervention came in on the move down. All right. All right, now I just want to spend some time on the euro yen, because here's the euro yen price action, and it looks pretty terrible through the course of the last month, but it's just a range bound environment, and it's a very good example of, well, if it's a range bound environment, you can trade like at range. There was actually plenty of opportunities within this range to trade. Now, what was happening on the euro yen? This weekly high here was kind of being used. It's 157.99. And if you went to the weekly chart, you can see for most of the month, once we actually closed below it, we were closing at that level or below all month. We were trading above it, obviously, but for some reason, the market didn't want to, get itself above that level and trade up and beyond. All right. That's, and this is often the case. We're at a level where we're trying to trade above, but we keep closing back below. Now, if we drop to the day chart, then the reality is there's a closer reference point, which is this high here, 158.518, which becomes a reference point through the month. Because then we come back up, hold, the rejection candle to trade back down. Just pausing because I've got something coming in my chat. And yeah, you're saying in old times you would have chased price action, but now you're just being more patient. I mean, that's the thing that, you know, one of my mentors from a long time ago said, you know, he would say about trading, you know, like support and resistance from showing, he goes, I'm just sitting here waiting for price to come to me. All right. So I can have a level. I'm just waiting for price to come to me. If he comes to my level, I'm gonna look to trade, see what it does and trade. If it doesn't, I'm just waiting. I'm just patient. I'm not chasing price action. I'm waiting for the highest probability level for price to get to. So let's just talk about this level up here. We actually felt that level pretty much 4 times. And then, you know, if you did trade up here this week, it would have dropped down, but that's in the new month. All right, so I just want to talk about trading at a level that keeps holding. All right, we do have a range in here. I would be, you know, probably using this level here because we got a bit short, then we false break twice. So that would have been 156.864. And I'm just going to talk about the top of the range. But you can reverse my analysis for the bottom of the range to trade down at the bottom. But I just want to focus on the top of the range up here. All right, so that's my primary low for the range. That's my primary high for the range there. So I'll draw a fib, and I'm just going to look at the opportunities to trade down. So I'm on my 79% level at the top of this fib. All right. All right, so we come down here and we come back up to the top. Now, if you weren't, first of all, sure that this was going to hold as a range up here, this 4-hour candle here comes up and puts in a little bit of a spinning top. But then we come back up again and start to hold. So if you're not happy to just have an order just sitting there, you can wait to see what price is doing. And it's maybe starting to tell you that it's holding there. So then, you know, you could be looking to trade at or very close to that level. All right, my stop goes at the 127R. And of course, we come back down to the bottom range. So that's where you're targeting to exit. Of course, you could also be then looking to trade back up from the bottom of the range, to trade back up to the top, which it does. All right, I just want to focus on the top here. So we obviously have one trade down from the top. We come back down. This time we come up. We don't quite meet the top. And we may start to have an idea that this is turning down. So there's actually a 4-hour candle entry break there at the 79% level. So you could trade short there, stop above that high, target the bottom. Doesn't quite meet the bottom and then comes back up. So you would have to manage the trade. Ultimately, it once more meets here. So if you're looking to buy the bottom of the range, there's your entry. Stop at the 127R. Exactly the same that was here. All right. And then we come back up to the top of the range. Don't quite meet the top. We actually meet this high. There's a 4-hour entry just there. Break of that candle. Would have been better to try and trade as close as you can to the 79% level. Stop above the high. And then, of course, in my webinar last night, I was saying this could be once more holding here. It did actually hold there, but then when the dollar yen hit 150, all hell broke loose. And of course, the range is going to break at some point. So maybe you could have been trading down here at the bottom range once more. Stop at the 127R. And this time you're wrong. And I'm not going to suggest that you're never going to be wrong, but that range there pretty much offered you 1, 2, 3, 4, 5 winning trades and then a losing trade. All right. And when you look at the price action, it doesn't look very enticing, but it's just staying to a very clear range. All right. And, you know, if you want to trade the range style trade entry and exit strategy there, pick a range and just trade the smallest amount possible and just get comfortable trading it. You know, trading at the base of support. Stop at 127R. All right. Trading at resistance. Stop at the 127R above. All right. because there was 1, 2, 3, 4, 5, 6 trades. 5 out of 6 would have won. Now I know it's hindsight, but you know, if you can see it in hindsight, then you need to start trying to see it in real time, because there's a clear range there. All right, that's how you could have traded throughout the month on that pair. All right. Any final questions? All right, so hopefully that gave you some good food for thought as we're moving into the new month. Of course, some of these pairs have been trading extremely nicely, like the euro dollar and the pound dollar. Some pairs haven't. Some of the yen pairs haven't been trading that nicely, especially though. I mean, really, that euro yen wasn't trading that nicely. However, I've clearly shown you that there is a way to trade it. And that's how it looked on the day chart. I tend not to trade that kind of structure. I try to look more for what's been happening on the the euro dollar. That's showing a much more clear trend. But it just proves the point that through the course of the month, you may have been able to make more money on the euro yen than the euro dollar. Five trades there, and each trade may have offered you at least a risk reward of 1 to 3. In fact, if you're trading, when you're trading the range, just to give you that heads up, if I just go back to my euro yen, I'll just draw in a fib. We'll just take the short example because I was looking more at the short side than the long side and just discussing things there. If you've got a range, this is why I utilize the 79% level in the range. So let's just color that range in a bit. Is, if we're at the top of the range and you're looking to short up here, even if you're not prepared to trade, if you're prepared to trade there, your stop goes here. And you're entering here. Is there you're risking pretty much 27 and you're targeting 100 down there. So that's a risk reward of almost 1 to 4, almost. All right. If you're not prepared to trade there, but you want to trade at the 79% level, stop just above the high. Here you're risking about maybe 22, and you've got approximately 79 below. So if we call it 80 to 20, again, you've got approximately a risk reward of 1 to 4. All right, so when you trade in the range, if you're getting in at the best prices, you've almost got a 1 to 4 risk reward. So on that, as I was showing you before, if we had 5 winners, that would be like, let's say risk reward 1 to 4, 5 winners, you would make 20, because if you're going to win, you're going to make 4. 5 wins is 20, and then you have 1 loss. So then you're back to 19. All right, so you would probably make more trading that range on the euro yen last month than you would just trading the euro dollar. But when you look at the price action chart, you wouldn't probably think that. So structuring, getting good and structuring great risk reward within the price structure that's showing you is how you can certainly grow your account. Azure, you want me to have a look at the NAS 100? All right, well, let's just finish off with that. Quick look at most recent price action. Well, I mean, from the big scale here at the moment, we could be fading at the 79% level for a long-term move down. That's the same, I think, on the S&P 500 and the Dow, but especially on the S&P 500 too. I mean, it's too early to tell whether this is a significant high to move significantly lower, because it's actually in an uptrend on the monthly scale. It's a higher top to that top. From a weekly chart perspective, it is in a downtrend. So it really needs to break below what I just saw there on the monthly chart. this area here at 14,373 needs to give up. Until we can give that level up, you know, we could hold there and then continue all the way back up. So that's the area there, that monthly low there. You can see last week we're having a bit of support there. So if we get a clear break below there, so if we see a break, then, you know, and then it's a retest down. At the moment, this could be support to come back up that way. You know, if we start to form a little bit of a higher bottom here, I would suspect we're moving back up. If we can't follow through below that low and that support level this week, we could be moving back up there. We're definitely on support. That support, you know, if that support breaks, then we could have a clear move to the downside. But at the moment, that is where support is, right where price is testing at the moment. Okay, that's it. All right, everybody. Hopefully got some vibe from that as you move into the new month. Just give you a heads up. Tomorrow I've got live analysis at 8 p.m. Sydney time. If you've got the time, look forward to seeing you then. Other than that, have a great trading week. And I'll see you next time. Thanks, everybody.